Namaste. December is ending, and if you are a credit officer, relationship manager, or anyone working in the loan portfolio, then you know the quarter three is ending, and we are just 3 months away from the 31st March. This is not just another quarter ending, this is the last chance to clean up before the year ends, the financial year 25-26. And it's the right time to ask the hard question, what are the accounts that will give you sleepless nights in the future? Yes, I'm talking about the potential, the hidden NPAs. And before something goes wrong, just it's the perfect time to fix it, since you know after year end there will be many transfers, promotions taking up. So this is the best time you can check, you can go through your accounts, and you can uh, fix up the mistakes or anything that is incomplete. Hi, my name is Sangeeta Sharma, and in this video, I am going you to walk through the battle tested checklist that will help you identify the red flags in March 31st so that these don't become write off in the financial year 25-26. So, grab your chai, open your dashboard, and let's start. So, let's start with why this quarter is critical. Now, before we jump into the checklist, let's talk about why December 2025 is a critical inflection point, right? Now, look at the timeline. Quarter 3 closing, right? Your last quarter review before this year ends. And now, January to February, this is the hangover month, festival sales reality check. And you will know what the actual sales were in the festival season, right? In January to February, because up till December, the GST return of almost all the customers have been filed. And then comes March 31st, financial year 25-26 closing, and then is where everything must be reported. Now, here's what happening around us. Let's take a quick look. The RBI has been maintaining a tight monetary stance, right? Repo rate changes mean your borrower EMIs have shifted. The maximum now the RBI has lowered the repo rate, and all the EMIs has gone down, right? Now GST collection of quarter two are now visible. You can check how much sales your customer had done in past 6 months. That reveals your actual business performance, just not the projection that customer has given you when you they applied for the loan, right? Now real estate, which looked stable, now is showing stress in tier 2 and tier 3 cities. And now here's the big one, the festive season, right? The Diwali is over, the Shara is over, Christmas is just about to end, right? Now, and January and February will tell you that who actually made the sales, who the customer who was saying that no, we need money for our this festival season. Now, after December, you will come to know actually did they use the money, did they make the sale as per their projection, and are they running either on the hope, right? Now, here you have exactly 90 days before 31st March, right? That 90 days we can say to identify stress, 90 days to have tough conversation with your borrowers, and sometimes 90 days to restructure if something is needed. If your any account is showing stress, you can restructure within these 90 days, right? And 90 days before your portfolio gets locked for your annual reporting, and that's important. Plus, with this, the new IRAC norms and stricter provisioning requirements, catching stress early is not just good practice. Now it's the regulatory survival for you, right? Now, what you can do, the pre-review preparation. Okay. Now, what is step one? Get your data house in order. That is much more important, right? Before you review a single account, you need three things ready. The Trinity report. That means the last 12-month bank statement. I'm not talking about your OD or CC or current account. I'm talking of all the banking accounts of your borrower, right? Their latest GST return, at least minimum past 6 months who have filed up to September quarter. Updated stock and book debt statement. This is the must and must now. Here's a pro tip from me. If a client is dealing any of these, then trust me, this is a red flag. No healthy business will hide their data, right? Now, second in step one is the utilization pattern. Put all the drawing power utilization for your CC or OD accounts. Now, what you are looking for is consistency 90% plus utilization for 6 months. This gives you a stress signal, right? If the customer account is over, or CC account is always overdue at the month end, due to the interest charge at the month end, then this gives you a stress signal. Erratic drawings with no pattern, right? Cash flow issues if you find them in their power utilization report. Quarter end dips followed by immediate peak uses. This is called window dressing. You need to just look this, right? Now in Indian MSME, this pattern often appears 2 to 3 months before the first bounce. So you can look here, you can get ready for your March quarter, right? Your final year ending. Now, in this, the third step is the external intelligence. This includes that you need not to rely solely on the bank data. You can check the CIBIL report, credit bureau report, maybe Experian, maybe your Equifax or CRIF. You can check anyone, right? You can look up ROC filing for charge station. It does not cost you anything. It will take hardly 10 to 15 minutes. You can go to MC21 site and you can directly check, at least you can check the top borrowers of your bank you have sanctioned last 4 to 5 months back, right? GST portal check. You can check directly, go on gst.gov.in and you can check there, are they filing the GST returns regularly. I hope there are no notices, right? And this is also completely free. And also you can check on the MSME Samadhan portal if there is any delayed payment to vendors. This will show you the stress, if there is any stress in the account, and you can take immediate action, right? Now let's move forward. Now now let's get into actual review of your accounts, right? I have broken them into 4 risk categories. Let's discuss them. Now first risk category is cash flow red flags. They are the deposit mirage. Now client maintain good balance, right? But they never default. You think everything is perfect, right? No, you are wrong. Check where the deposits are coming from. Are they bringing cash and depositing just before the EMI date, or are deposit matching their business cycle? In trading firms, are you seeing the inventory turnover in the statement, right? I just remembered a case of my friend, a textile trader in Surat. He showed very healthy account conduct, but every month deposits were coming from his personal saving account, not from the buyer payment. You understand this, right? Now then within the 5 month the account dried up and his account became NPA because actually his business was not running. He was using his personal saving account to pay the interest and to pay the EMIs, and eventually his all the savings vanished and the account turned NPA. So look for the deposit mirage. Okay. Now second flag in this category is the check bounce pattern. Now, I don't say that all bounces are equal. You need only to watch for the bounces due to insufficient fund versus stop payment, right? Bounces on the first or third of every month, they couldn't arrange by salary date. That is also much more important, whether the employer is paying salary to their employees or not. And multiple representation of the same check. Suppose if check bounce again and again, the check is being represented, so you need to look that in your account statement. Now one bounce can be maybe mistake, but 2 bounces in a quarter, that's a pattern. You need to look for that. Now flag number 3 is the lock and trap. Now this is used in Indian banking, right? The client who's logged in with you, now signs are they are using 100% drawing power for the past 6+ months. Okay, there is no reduction in principal outstanding. You see your CC limit, suppose you sanctioned for 100 lakhs, say, and from past 6 months there is no change. Suppose say 5 lakhs coming, 5 lakhs withdrawn, 5 lakhs came, 6 lakhs come, 6 lakhs withdrawn. So you need to look this pattern. There is no reduction in your in the principal outstanding. Now interest service from same CC account. Okay, and no other banking relationship visible. You cannot say that there is any other banking relationship, like there is no FT or there is nothing. Now, why this is dangerous? Because the day you ask them to reduce, they will never, trust me. And that's when you discover they are just surviving, not thriving. Okay. Now let's go to red flag category number 2, that is business reality check. Now, flag number 4 is the margin squeeze. Now pull out their financial ratio. Now let's compare is healthy sign versus warning sign. Okay, if the gross margin is 20% plus, then this is a healthy sign. And if the SCR is more than 1.5, we have already said this is a good sign for your business. Current ratio is more than 130 1.33, a good sign. Now, what are the warning signs? If your gross margin declining continuously, your DSCR drops from 1.5 to 1, or say maybe 1.25, this shows your EMI is barely covered. Current ratio has gone below 1. Now, just you need to check industry specific margins here. Textile has 8 to 12%, that is normal. Auto component part industry has 15 to 18%, and pharma distribution 4 to 6%, right? In your pharma distributors, if it shows 15% margin, then this is also wrong. You need to look for it, right? Now let's go to flag number 5, the working capital mismatch. Now this is huge. This is mathematics 101 that kills the business. Say, suppose if receivable days are 90 days and inventory days are 60 days, but payables are only 30 days. Now, can you tell me where's the gap is being funded from? That's your loan. And if the sales slow down, say even by 20%, the model will collapse completely. So you need to look for working capital mismatch. Now, flag number 6, the promoter's lifestyle check. I know this sounds judgmental, but let's be practical, okay? Let's see. Your promoter got a new luxury car purchase, then please check RTO records if possible. Kids were sent abroad for education. This means sudden large remittances. If he bought a real estate purchase in his personal name, social media showing lifestyle inflation. I know these are not crimes, but if the business margins are tight and the personal spending is high, cash is being diverted, and you need to look for that. Maybe your loan amount is being used for that luxury car. Maybe your amount is being used to send the kid abroad, or maybe in your short term, or the short term fund you gave for day to day business, he is using in real estate purchase. So you need to keep an eye on this. That is called the promoter's lifestyle check, right? Now let's move to next category number 3. I call it documentation and compliance red flag. Let's start with flag number 7, the audit delay. Now financial year ended in the March 2025, and it's now December 25, 2025, and already we are 9 months ahead, right? Now, if the financial year 24-25 audit is not complete, please ask your borrower why. And if you find that they have changed the auditor, ask what the issues was with the previous auditor. And if they give you excuse like C is busy, seriously, up till 9 months, they are negotiating what to show you. And if they are saying qualified audit report, please read the qualification. It's a treasure map to problems. So for financial year 25-26, 25 and 26, your audit must be ready by September 26 due date, right? Now, if last year audits took more than 9 months, then this is a systematic issue, not a one-time delay. So please check for it that all the audits are done and the audit report is submitted to you by the borrower. Now next is important one, stock audit surprise. Now you need to compare the last stock audit, maybe June, September and December, let's say. Now same stock appearing for more than 6 months, that maybe the stock is either dead or it is unsold inventory. Now if stock value suddenly jumped before the quarter end, then this shows that inflation is asset backed. And if the physical verification is always kept being postponed, that implies that maybe stock does not exist. Now, in manufacturing industry, stock turnover should be 6 to 8 times minimum in a year, and if it's 2 to 3 times, then you are funding a warehouse, not a business, right? Now, if you have not done a stock audit since September, schedule now. Now, before 31st March, don't let this year end close with 6 month old data, please. And here, by stock audit, I don't mean that for 10 or 25 lakh account you just go for stock audit. This can mean the verification of your stock statement, verification visit of the stock statement submitted by the customer, the book date statement submitted by him. You can cross check it with the accounts of accounts that are maintained with him, right? Now, flag number 9, the insurance gap. This is much more important. Now, check if in stock insurance is current. Some insured matches your DP calculation. Premium paid are paid on time. If bounces, then they are prioritizing other payment. Now, suppose, just imagine this, if one fire or maybe one flood and your entire security is gone, you cannot do anything about it. This will be your default at your point, right, at your place. So please ensure stock insurance is always valid, and some insured should match at least your DP calculation. Okay, now let's move to red category, flag number 4, that's external environment flags. Now, flag number 10 is industry specific stress. Okay, now some sectors are facing systematic stress right now. The high alert, sorry, high alert are real estate. I'm not saying in tier 1, it's tier 2 and tier 3 industry, export oriented industry due to currency demand issues, NBFCs due to liquidity pressure, and unsecured personal loan relying heavy retailers, right? Now you need to watch closely also your auto dealers, for inventory finance, that your small hotels and hospitality businesses due to occupancy versus cost issue. Now let's go to flag number 11 quickly, the concentration risk. Now check if your client has one major customer, at least, if the one major customer means that more than 40% of the sales are from one customer. One major supplier means price vulnerability, and one geography, that means region. If something happens, then this will affect their sales, right? And if their sales is affected, their business is affected, it affects your business, right? Now let's take an example. A small auto component maker in Pune, um, his 70% revenue was from one OEM, and that OEM delayed payment by 60 days due to their own issues. Now, and that our client could not pay us, though their business was technically fine. So make sure that your client has no one major customer, no one major supplier, or it is not limited to one geography, right? Now let's move to flag number 12, the promoter age factor. Now this is rarely discussed, but this is very critical. If promoter age is 65 plus and there is no succession plan, this is a big red flag. You need to watch it. Now say if maybe his next generation is not interested in business and you are giving a loan to a 65 plus customer, can you imagine if something happens to him, what will you, where will you recover your loan amount if there is no security, right? Key person dependency, only a single person knows all the suppliers or all the buyers. Please plan for transition now, not when it becomes an emergency for your customer. Okay, now the action matrix, we have talked a lot. Now let's uh, know about the action matrix, right? Now you have identified red flags. Now what do? We will place them into 4 major categories, that is green zone, yellow zone, orange zone, and red zone. Let's start with green zone, 0 to 2 red flags. These are generally the safest zone, right? Since it is green zone and only 2 red flags, we can um, ignore it, right? Now what is the action you can take is just standard monitoring, maybe annual review is sufficient, because there are no such major red flags. Two red flags is very minimum, right? Now next is yellow zone. Here there are 3 to 5 red flags. Now what action will you take? Now you can increase monitoring to monthly, ask for additional collateral or guarantee, reduce exposure if possible, and maybe just have formal discussion quarterly or monthly with the promoter. Now next comes orange zone. Here you find 6 to 8 red flags. You will the account showing 6 to 8 red flags. You will keep them into orange zone, right? Now what action you can take? And here you need to take immediate action. Now you can stop further disbursement. Now since in yellow flag you were monitoring the account monthly, here you need to monitor the account weekly. Demand reduction plan with timeline. Consider the account for restructuring, because this is the time you need to think. If the account is showing 6 to 8 red flags, the accounts need to be restructured. Now then comes red zone with 9 plus red flags, or we can say the critical flags. And now this is time is for crisis management. Classification review, these are your potential SMA. Legal documentation review, you need to check your document you took from the borrower at the time of the loan. You need to review them, you need to check, you need to plan for the recovery, because you know these account will definitely, if they are showing 9 plus red flags, you cannot say that this will not turn into NPA. Definitely they are your potential SMA. Even it's not bad to say that they will be a potential NPA, right? So you need to plan your recovery strategy. And the most important is you need to escalate this matter to your senior management, maybe your regional office, maybe your zonal office or central office, anywhere as per your bank. Now always remember, catching an account in yellow is better than fixing it in red. So if you monitor them now, maybe you can catch here, and you can just check them for the, you can take the immediate action, and you can help them to get out of those zone, right? Now let's talk about the difficult conversation. Here's the part no one teaches in banking courses, right? How do you talk to your client? Now, the right approach is that please don't say your account is showing stress or we need additional security. Just say this: we have noticed that there are some changes in your account conducts. Let's sit down and understand what's happening in the business and how can we support you through this phase. And trust me, when you say this, the customer feels like, okay, they are not just pinpointing me, they are ready to help me, and they will open up more. Now here the 3 question framework that I suggested. Just ask them, what's changed in the last 6 months, right? Let them explain in their words. Before you make any judgment, just let them explain, let them say anything. Now second question you can ask is, what's your plan for next 3 months? Means suppose if this crisis has happened, then you must have backup plan, right? Now it just shows if they have visibility and control. They will tell you, because if they are into a crisis, they must have some plan to get out of it, right? And the last question to show them faith, trust is, what support do you need from us? This opens door for restructuring before your accounts become an NPA, right? In my experience, promoters appreciate honesty. Trust me, they know their business is stressed, and what they fear is that you will pull the plug without warning. You will ask them security, you will ask them their money back. So early intervention has more option and gives you highest chances of recovery. Okay, we are clear. Now let's move to the what documentation you need. Now before 31st March, you need to ensure you have updated board of resolution for borrowing powers, and that must be valid till 25-26. Second is latest charge search report dated within last 3 months. This you can check yourself also from mca.gov.in, sorry, MCA 21 site. Okay, and then you need your renewed stock and book test statement that you need every quarterly or monthly as per your sanction condition, right? Then insurance policy renewals, annual policy expiring in March, you need to take care of this. Then guarantor's net worth statement as on 31st March 25 or maybe after that. Then updated KYC for all the parties, especially if Aadhaar or their PAN needs renewal. You need to take up, and this also ensures that you need to check the KYC they submitted at the time of loan. It is same. Maybe Aadhaar address have changed. Maybe they were on the rent. Now they have moved to their own, or maybe they have changed the city. So you need to take updated KYC for all the parties. And the last is current PDCs and ACH mandates covering at least April to June 2026, right? And one more you can take is your GST return, updated GST return, GST 3 week, and check with their account statement. Now, just remember March 31st is not just your year end, it's also ITR filing season, GST annual returns, and audit season. So please don't compete with CSA for your client attention. Just get documents now. You don't need to just wait for the March 31st, right? So you have it all, right? Your year end comprehensive checklist. Look, I know it's a lot. You are already handling more than 100 plus accounts. Your targets are breathing down your neck, and here I am adding a more to do. But here's the truth, the 30 minutes you spend on each account can save you 30 days of stress in the future. The best credit officers are not those who sanction the maximum loans, they are the ones who identify the problems before the account even becomes NPA. Your portfolio is your reputation in the industry. Your one bad year can overshadow your five good ones. So please don't let it happen. Before you go, let's revise the checklist again. Number one, block your calendar. Over the next 2 weeks, just review your portfolio. Number two, download the checklist. I will provide the checklist in the description box. The link you can download it from there. Number three, start with your top 10 exposure clients. Number four, have honest conversation with your borrower, with your clients. And number five, the most important one, please document everything. And always remember, stress in business is normal, stress in banking is manageable. It's the surprises that kill us. So start your work now, review your files now, and sleep peacefully later on and have a stress free. If this video has helped you, hit the like button, share with someone who may need it, and subscribe for more banking related insight. Before you go, I want to tell you that I have a WhatsApp channel with the name Smart Credit with Sangeeta, where I share day to day case studies that are really helpful, small and important updates, tips regarding your business, regarding your credit. So you can follow. The link is in the description box. Until then, thank you.